This is a quick look at why I like to buy in October. This is the Yahoo Finance pages I'm using, and it's free, so you can just set up an account and you can save these, or you can just type them in all the time. But I have an account, and I just click on them, and they come up. And what I've done here in the top here is I've got the June 1st through August 22nd chart here, so you can see we had a little bit of a low here in June, and we've had a pretty strong rebound, and I was hoping for the rebound to go through September and then look for a drop off and buy October, and I'll show you why. So I don't know if this is going to go back up, or maybe it's the buying opportunities going to come in earlier than I was anticipating. Maybe it's not even a good buying opportunity. This might be an off year, but let's take a look at just the last 10 years of how it's done in the second half of the year from June to 31st. So obviously we don't have that. I'm using the past 10 years of speculation is what's gone on. So let's look at 2021. So this is the NASDAQ 100. I like to use the NASDAQ 100, but you can see above the NASDAQ 100 here on the top left, you have the S&P, the Dow, the NASDAQ, the Russell. All those would be more on the growth sides of the market. If you pull up a chart on these, the charts are pretty much going to look identical. It's just the NASDAQ tends to have a higher percentage up or down. You also see that there's crude oil, and then there will be gold and silver, and there's also utilities. Those are more of a defensive play if you were looking to have some defensive strategy in case the market is tanking. But there's no guarantee those could tank with it. So anyways, I like to buy in October. Just early October, if I see a big dip, I'll try and take advantage of it. Taking a look at 2021 again. If you were to have seen in September, there seems to be a bit of a peak here, and then it tangles down, drops down a bit. Early October, a good buying opportunity. 2-month hold, 3-month hold, and look at the kind of gains you've got on just 2021. So 2021 was successful. October again in 2020. So you can see there's a bit of a peak in early September, and then I like to kind of sit on money and then look for buying opportunities here. This early October, late September is when I look for buying opportunities. So I might have got antsy here already and maybe bought, or maybe hold on to the late September. But if you just said, okay, October, every October I'm just going to buy, you're still buying in lower than what it wound up at the end of the year. So 2021, 2020, and 2019, the same thing. If you bought in October, you got good rates of return. Our best rates of return seem to happen frequently from October to December. So 3 years in a row, 3 good years in the market, and then 2018 came. It was not such a good year in the market. So the NASDAQ is, the NASDAQ is currently at 12,800, and you can see if you would have bought in October, you would have been buying at 7,600, and then it drops all the way down to 6,000. Well, this is why I like to have money to keep accumulating and buy more on the drops. So maybe I would have bought here, but if I buy here, if I did happen to get lucky and buy right here, I wouldn't buy any more for a month. I like to wait 30 days before I buy more. It's a good habit just because of taxes. That's a whole nother thing. But if I bought here, I wouldn't buy again. Maybe I would have bought here, but I'd probably be looking more for a dip here, and I would have been really lucky if I was smart enough to buy down here. Let's say you did buy here at the end of the year, 6,000. If you would have bought this at 6,000, you would have more than doubled your money. In fact, if you go back, it's at 8,700 in 2019, and in 2 years, you would have doubled your money at 12,200. Okay, and if you were smart and taking profits out at 16,000, you could be buying back today at 12,800. Or I'm actually looking for a lower rate, going more down towards 11,000. Hopefully in late October to buy more. Okay, so 2018 was an off year, but 2017 again You buy in October, late September, early October. Again, you're 4 out of 5 now. You buy in 2016. You buy in late October or late September, early October. Not much of a gain, but you're still on the upside. And if you were smart, you were holding and maybe bought more in this range. Okay, so because maybe we didn't have that dip, maybe that dip didn't happen until November. So typically, you know, October seems to be a pretty much of a pattern with the market, that optimism comes in through November and December. Take a look at 2015. Again, here we are. Big dip in August. Could maybe buy and then sell out early September. But again, if you just play the game, I'll just buy more in October, late September. If you were to buy late September, early October, again, you're having another successful year. And this is buying in at 4,000. In today's day, you're at 12,800. It went up 16,000. You're 4 times your money, 400%. 400% is a really good gain. If you consider that, if you just invest for 30 years at 12% rate of return, a normal $500 a month or whatever, you'd be well over $1 million at 12%. So getting 400% in 4 years, really good rate of return. Go down to 2014. Again, holding on to a big dip in October. This dip didn't happen. I might have honestly bought right around here, and on the 10th, or if I got lucky, I'd buy on the 14th and the 15th. But again, buying in October, even if you bought October 1st, you can see that you would be successful just in those few months here. And again, we're down at 3,800 here for that year. 2014, again, another dip. Sometime in October, there's a big dip. Whoops, wait a minute. I think I just did 2014. Sorry, duplicated that. Should be 2013. 2013, not much of a dip, but you know, I've been accumulating all year, so I don't want to miss out. So I'll buy in October and hope for the best. Again, another successful year. Buying in October, by the end of the year being up, and then November. 2012 was another bad year in the market, but even in a bad year in the market, buying in on a dip in October sometime, you wouldn't be up, but if you were smart and had bought on the low, you are up for the year at the low. So 2 years out of the 10, you didn't do great, but even now, you look at, if you bought October 1st back here, maybe that looks terrible. But you go 2 years out, and then buying in October. Oh shoot, that was 2 years. Sorry, I can't go back now. Why can't I go back? Let's pull that chart back up. I'll click chart right here with the middle button, and then I'll come over here and why didn't it give me my date range on this one here? Click this chart. I have to manually do this for some reason. So I changed this to 2012. Change this one to 2012. And 12/31. Apply that. Oh, you know what? I think I didn't have the right chart up. So this is 2012. Here we are, early October. Not really a big drop, so I don't know how much I would be wanting to buy, but I would be getting antsy because I know I've been saving up money and accumulating. I want to accumulate, so it'd be hard for me not to get in on probably that little drop right there. Definitely in here on this drop, I would have probably been in hoping for the best. But you can see in 2012 wasn't a good year in the stock market, but from October to the end of the year, there wasn't a big drop. In fact, if you're smart, you buy on this dip right over here, and then you are up for the end of the year. So if you've worked with me before, back in the old days, we used to just dollar cost average every 1st and the 15th of the month or whenever your paycheck was and buy whatever at whatever price it was. But things move so much nowadays. I think you're better off accumulating money in a money market and then saving up and buying in bigger chunks when the market's down. So this is my little spiel on what has happened. Past performance is not guarantee of future results, but October buys seem to be a good opportunity for you to increase your portfolio gains there. So good luck to you.